Hello everyone and welcome to my first lecture video on managerial accounting. And in this video, we're going to be covering some basic managerial accounting terms and concepts that we're going to be using throughout the class. So I really want to make sure that you guys get a good understanding of what these terms and concepts mean so that when we're talking about them in class, you can follow along and you have some concrete examples of what each of these things are. I'm going to give you one example here, but hopefully if you understand the concepts, you can be able to apply these examples to a multiple of different types of products as we're going to be doing throughout this class. So let's get started. Now, as we've touched on already in class a little bit, is the difference between merchandising companies and manufacturing companies. Now, we already learned about merchandising companies in Accounting 1A. In Accounting 1B, we're going to be learning about manufacturing companies. Now, they're similar in that they both make their money by selling inventory, by selling a product as opposed to a service. But the difference is a merchandising company sells product that is already in ready to sell condition. They just buy and then sell. Okay, so in this case, say you're a merchandiser such as Target, right? So Target is selling these Chips Ahoy cookies. Well, Target didn't make these cookies. They bought them from Nabisco. Okay, they didn't actually make anything. But Nabisco, as the manufacturer, had to actually make the cookies, okay? So they've got, of course, I know their kitchen doesn't look like this. This is obviously just a person just making them in their kitchen at home. But I chose this picture so that you can see kind of the multitude of things that are involved in the process of making cookies and how it's a lot more involved and more complicated than just picking up a package of cookies. It's already ready to go. Now, in managerial accounting, what we're trying to do is accounting in general is trying to capture the ins and the outs of a company to find out, well, how much money did they make? And so when it comes to a merchandising company, that's pretty straightforward, right? If I want to know the cost of these cookies, I would just look at the price tag, right? Or whatever was on the invoice that I got from Nabisco saying how much these cookies cost. For a manufacturer, though, it's much more complicated. So, if you look at this, I see a bunch of stuff in here. I see eggs, I see sugar, flour. I see somebody actually going through the process of stirring up the cookie dough. I see the cookies laid down on cookie sheet. I see an oven back there. I see just a kitchen in general. There's a bunch of stuff here that was involved in actually making the cookies. And what we're trying to do in managerial accounting is to figure out, how do I account for all of these different costs? So before you can do that, and before you get overwhelmed by all of these things, I want to kind of break it down because there really are just some basic categories and some basic terms, and we're going to try to break it down and simplify the process as much as possible. So there are three components of inventory costs: direct materials, direct labor, and factory overhead. So all of the things you saw in that last picture are going to be categorized into one of these three categories. Okay. So first, let's talk about direct material. And the way I like to think about direct material is it's the ingredients. Okay, so the book defines direct materials as tangible components of a finished product. In other words, all the things that the stuff that went into the product. And again, I'm referring to the tangible components. We'll talk about the intangible later, but tangible components means you can touch them. They're things, okay? So if you want to know what things go into a product, you would look at the ingredient list like in a cookbook. So if I was making cookies, I would look at the ingredient list in the cookbook, and it would tell me, flour goes in, eggs go in, chocolate chips go in. So all of these things would be considered direct materials. Now I want to mention real quickly this word components, because this might trip you guys up a little bit, but the term components means, of course, what goes in, but it doesn't all necessarily need to be things that you make from scratch. So, for example, chocolate chips. Okay, so Nestle made these chocolate chips that are going into my chocolate chip cookies. So I would still consider, these my direct materials that go in. I don't have to make the chocolate chips. So even if you buy components from other manufacturers, they would be still considered your direct materials, your raw materials that are going into the product. Okay, so it could be just stuff in its rawest state, like flour and eggs, or it could be stuff that somebody's already started the manufacturing process on, and then you're just furthering it, right? So we buy the chocolate chip cookies ready made, but then that's going to go into our product. Okay, so all of those things, all of those ingredients are direct materials. Okay. Next is direct labor. And that is the wages of the employees who physically make the product. So that's going to be like, I don't know if any of you guys know of South Park. This may be too old of a reference for you. There's a really funny little cartoon called South Park and this funny character called Chap. But that's basically, in this example of making cookies, that is going to be your direct labor, the person who actually makes the cookies. And so you see this guy here with his hands literally mixing the dough. He is actually physically making the product. Okay. The third component of inventory cost is factory overhead. And the term factory overhead, and I abbreviate it to FOH. So if you see that, just know that I'm referring to factory overhead. That has the most broad definition. And that definition is all manufacturing costs other than direct materials and direct labor. So in other words, if it's at all involved in the manufacturing process, but it's not direct materials and it's not direct labor, then it falls into this broad category of factory overhead. So within factory overhead, I would say there are 3 subcategories: indirect materials, indirect labor, and other. Okay, so we've already talked about materials and labor a little bit. We talked about what they were for direct materials and direct labor. So next I'm going to explain what indirect means. Okay, so direct versus indirect is just this. Direct is things that are clearly and easily traced to a product. Indirect means something that is not clearly and easily traced to a product. So let me give you some examples. I think it'll help you understand better what those are. But the point is that if it is direct, meaning clearly and easily traced to a product, it's going to be either direct materials or direct labor. If it's indirect, it's going to go to factory overhead. So we treat it like a totally separate category. Okay, so let me give you some examples of that. Okay, so for indirect materials, those are materials that are not clearly and easily traced to a product. And really, that means that either it's too small or difficult to measure, or it's a material that doesn't actually go into the product. So let me give you some examples of that. So sometimes in recipes, I don't know how much you guys cook, but you might, if you're reading a recipe, it'll ask for a pinch of salt. But how much is a pinch of salt? How do I even measure that? Okay, in that case, the amount is so small that it makes it difficult to measure. Okay, another example of that would be like cooking grease. Like if they asked you to grease a pan cooking spray, how do you measure how much cooking spray comes out of the thing to spray your pan? I don't even know if you can measure that. If you did, the cost of measuring how much spray you're using is more than it's even worth. So it just doesn't make sense to go through the effort of measuring the cooking spray. So this is an issue where it's difficult to measure. Okay? And the book gives you a lot of examples of other things like this. So for example, when you're talking about nuts and bolts, and there's small items, it's not even worth calculating, or it's machine grease. Well, you don't really measure exactly how much grease you put on a machine like WD-40 or whatever it is that you're using. It doesn't make sense to go to the effort to measure it. But it does go in and it is a cost you need to account for, but we're just not going to treat it the way you would a direct material that's easy to measure. Instead, we're going to treat it as an indirect material or factory overhead because it is difficult to measure. And another example is materials that don't actually go into the product. So, for example, if they want you to line your cookie sheet with parchment paper, well, parchment paper is a material that you have to use, but it doesn't actually go in the cookie. It's just part of the production process. So, if there's a material that doesn't actually go into the product, that might also be considered an indirect material as well. Okay. So now let's talk about indirect labor. Indirect labor is labor that is not clearly and easily traced to a product. So those are people who are involved in the production process but don't actually make anything. So that's going to be things like supervisors, cleaners, people who clean the factory, or quality control. So what I have, here, this is someone who's supervising the chef. She's not actually making anything. As you can see, she's not even wearing the chef uniform. She's just kind of like checking to make sure that he's doing everything right and telling him what to do. Here's the guy cleaning dishes, right? Very important that you have clean dishes, a clean facility when you're making stuff, but it's they're not actually making the product, so we treat it separately as indirect labor rather than direct labor. And then last is the other category, so other factory overhead. So that's anything else that has to do with the production process. So things like your factory utilities, right? You need light, you need water, you need gas to run everything. It's going to be the rent on your factory, right? You have to have a factory to make your cookies out of. It's going to be depreciation on the oven, not the oven itself, right? Because the oven is an asset, but the cost of using the asset is that term depreciation that we learned about in 1A. So depreciation is the cost that we're accounting for, the cost of using the oven to make those cookies. All of those fall in the category of other factory overhead. And we'll talk about how we actually treat those in later chapters. Just for now, I want to make sure that you understand the terms, the concepts, what they mean, and some examples. So I want to touch briefly on the difference between product and period costs, because what we want to capture in the cost of our product is only the costs that relate to manufacturing the product. So those are, again, the direct materials, the direct labor, and the factory overhead. But the cost of your inventory does not include period costs. Okay, period costs are basically non-manufacturing costs, costs necessary for the business, but not related to manufacturing. So those are going to be like your selling costs, so how you pay your sales reps, or if you have a sales showroom or something like that, that's selling costs. Or shipping the product to your customer, that's a selling cost. Or general administrative costs. So that's going to be like your HR department, your for your office headquarters. If there's no manufacturing done there, the office headquarters, the rent on that, the utilities on that all falls under general administrative because it's not related to the manufacturing process. Okay, so your inventory costs do not include anything not related to manufacturing. Those are period costs. They are treated differently than product costs. Okay, product costs, what has to do with manufacturing, actually goes into the cost of your inventory. Okay. Last but not least, I want to talk about the 3 stages of inventory, and or the 3 types of inventory that a manufacturing company has. It starts with the first stage, raw materials, and that is just the ingredients that go in that haven't been touched yet. Okay, inventory on hand and available for use. We haven't used it yet. It's just sitting there in our fridge or in our warehouse ready to go. Once we start the production process, meaning start putting the ingredients together and mixing them up, that's called work in process. Okay, that's any partially completed goods, and that can be at any stage in the process. Okay, so right, what you see here is the uncooked dough, but even as it's cooking, it's still work in process. And even while the cookies are cooling on the cookie sheet, that's still work in process. They are not considered finished goods until they're totally completed and ready for sale. That means packaged up and ready to go. So those are the 3 types of inventory. Raw materials, untouched. Work in process, somewhere in the middle of the process. And finished goods, completely done.